In today's ever-evolving financial world, two names dominate the conversation: gold and cryptocurrency. These two assets have captured the imagination of investors, sparking debates in boardrooms, online forums, and even around kitchen tables. Both are often called alternatives to traditional investments, but beneath the surface, they're fundamentally different in almost every way. Comparing gold and crypto is like comparing a sturdy brick house to a digital blueprint. One is proven by centuries of use, the other is a bold vision for the future, full of potential but still being built. This isn't about picking a winner or declaring one superior, it's about understanding what you're really investing in, and what each can offer your portfolio. Gold is ancient, tangible, and trusted. It's been a store of value for thousands of years, surviving wars, crises, and the rise and fall of empires. Crypto, on the other hand, is new, digital, and driven by belief in technology. It's reshaping how we think about money, ownership, and the very idea of value. Both are seen as ways to escape the traditional banking system and hedge against inflation. But the risks and rewards they offer are worlds apart, shaped by different forces and histories. Gold's value is rooted in physical scarcity and a rich history. Crypto's value comes from digital scarcity, code, and the hope of future adoption. They're not two sides of the same coin. They're different currencies of thought, each reflecting a unique philosophy about wealth and security. In this chapter, we'll break down what makes each unique, so you can make informed decisions that fit your goals and risk tolerance. By the end, you won't just know the difference between gold and crypto. You'll truly understand it and see how each fits into the bigger financial picture. That understanding is your most valuable asset, empowering you to navigate the future with confidence and clarity. Gold is history you can hold. It's a physical link to the past, a treasure that has fascinated humanity for millennia. For thousands of years, it's been a symbol of wealth, power, and beauty. From the tombs of pharaohs to royal crowns and ancient coins, gold has always represented status and security. Its value isn't based on hype or code, it's built on a track record that outlasts every currency. While empires have risen and fallen, gold's worth has endured, trusted by generations across continents. Gold is tangible, doesn't corrode, and is dense, making it easy to store significant value in a small space. Unlike paper or digital assets, you can actually hold and safeguard it yourself. Beyond being a store of value, gold is used in electronics, dentistry, and aerospace, and about half of demand comes from jewelry. Its unique properties make it essential in technology and industry, not just in ornaments. This real-world utility gives gold a price floor. Even when markets are volatile, gold's practical uses help support its value. Gold's supply is naturally limited. Mining is slow and costly, so new supply grows predictably. Unlike other resources, you can't flood the market with gold overnight. You can't print more gold, which is why it's a classic hedge against inflation. When governments create more money, gold's scarcity stands out. When paper money loses value, gold often holds steady or rises. It acts as a safe haven when confidence in currencies fades. Investing in gold means buying stability and a proven asset with diverse demand. It's a way to balance risk and add resilience to your portfolio. It's a defensive play, an emergency fund for your portfolio. Gold is there when you need it most, offering peace of mind in uncertain times. Gold won't make you rich overnight, but it helps ensure you don't become poor overnight. That's its true power: steady, reliable protection for your wealth, no matter what the future holds. Now let's talk cryptocurrency, the digital frontier. Bitcoin, the most famous, was created in 2009. Its history is short, but its impact is huge. Cryptocurrencies are digital tokens on decentralized networks. No physical coins, just code and consensus. Their value isn't from physical use, but from technology, adoption, and belief in a decentralized future. Bitcoin's supply is capped at 21 million, mimicking gold's scarcity, but this is programmed, not natural. Thousands of cryptocurrencies exist, and new ones can be created anytime, making overall supply limitless. Investing in crypto is betting on technology and future adoption, not on a proven track record. It's a story of disruption and speculation, not stability. That's why crypto is exciting and risky. The biggest difference? Volatility. Gold is steady. Its price moves, but rarely in wild swings. Investors flock to gold for safety during crises. It's a calming force in a portfolio. Crypto, on the other hand, is a roller coaster. Prices can soar or crash by double digits in a day, often driven by hype or headlines. This extreme volatility attracts thrill seekers but can devastate the unprepared. Gold investors seek preservation and peace of mind. They're risk-averse and think long-term. Crypto investors often chase big gains driven by FOMO and the dream of quick wealth. One is about defense, the other about high-risk offense. Know your emotional limits before you choose. Are you seeking stability, or are you ready for a wild ride? Be honest with yourself. Safety and rules matter when investing. Gold markets are mature and highly regulated, with clear systems for buying, selling, and storing. You can buy gold through reputable dealers or financial products, all under strict oversight. This regulation gives investors confidence and legal protection. That's why institutions trust gold. Crypto's regulatory world is the Wild West. Rules are new, inconsistent, and changing fast. This lack of oversight means more risk scams, hacks, and sudden government crackdowns can wipe out investments. Crypto exchanges aren't as protected as banks or gold funds. Blockchain tech is secure, but the ecosystem is young and vulnerable. Investing in crypto means accepting higher regulatory and operational risk. So, how should you use gold and crypto in your portfolio? Both assets have unique characteristics, and understanding their roles is crucial for building a resilient investment strategy. Gold is for wealth preservation, a stabilizer and hedge, not a growth engine. It's been trusted for centuries to protect value during economic uncertainty, inflation, or market turmoil. Advisors suggest a small allocation, maybe 5–10%, as insurance against shocks. This modest slice can help cushion your portfolio when stocks or bonds stumble. You buy and hold gold for the long term, not for quick profits. It's about patience and security, not chasing rapid gains. Crypto is the opposite, a speculative asset for money you can afford to lose. Its prices can swing wildly in a matter of hours or days. It's not for retirement or college savings, it's for the riskiest part of your portfolio, if at all. Crypto is best kept away from your essential long-term goals. Most people should keep crypto exposure tiny, maybe 1–2%. This keeps potential losses manageable while still allowing for upside if things go well. Crypto is more like venture capital than a blue-chip stock. You're betting on innovation, but the risks are high and outcomes uncertain. You hope for big returns, but must be ready for total loss. Volatility is the norm, not the exception, in this space. Don't confuse gold's stability with crypto's potential for explosive gains. Each asset behaves differently and serves a different purpose. Each has a distinct role. Mixing them up is a recipe for disaster. Treating crypto like gold or vice versa can lead to costly mistakes. Use each asset wisely, if at all. Make sure your choices fit your goals, risk tolerance, and time horizon. We've explored gold's old world and crypto's new frontier. They're not interchangeable or direct competitors. Gold is about enduring value, physical reality, and stability, a financial anchor. Crypto is about digital innovation, volatility, and speculation, a bet on the future. There's no single winner. The right choice depends on your goals and risk tolerance. Want to protect wealth for decades? Gold is your ally. Ready to gamble on new tech with money you can lose? That's crypto. Don't let hype decide for you. Understand the difference. Gold is defense, crypto is offense. A smart plan uses each in its proper place. Build your future on knowledge, not noise.